Nokia, BlackBerry, and IBM, once household names, are now shadows of their former selves, and Apple might just be next. For years, the tech giant behind the iPhone, iPad, and Mac seemed unstoppable, even becoming the first company in history to hit a $3 trillion valuation. You can imagine how troubled the global market became when Apple lost a third of its value in just 3 months. However, the problem runs deeper than just releasing identical phones with massive price increases. It seems they are following an old pattern. So what really happened? Why did Apple lose $1 trillion? And could this be the beginning of its decline? When referring to a company's peak, the most important aspects are arguably finances and the general impact on people's lives. Based on this assumption, the years 2007 and 2024 become most relevant. Apple has rarely been the one initiating gadgets. Its advantage mostly rested on their ability to think differently. And a clear illustration could be its all-out war with IBM. Back in the days, computers could cover whole rooms and depended on a constant energy supply to work. However, through innovation, sizes were reduced, and one could easily move around with portable computers. But they were too expensive. Prices ranged between $12,000 to $25,000 in today's money after adjusting for inflation. Money that very few could afford. And the company topping the race was IBM. Despite being a tech giant already, it made a controversial decision. It broke with its tradition of using only proprietary hardware components and software. Instead, IBM built its PC using an Intel microprocessor and a disk operating system from Microsoft. Thanks to this, the company could sell laptops at cheaper prices than its competitors, but it equally played against them. Several other companies copied by using similar components and selling cheaper versions. On the flip side, as IBM struggled to make it through, Apple launched the Macintosh. It wasn't just good-looking, it was also appealing to businesses and technical users. So they basically ripped off the benefits of a blue ocean. Yet, Apple's all-time peak could very well be linked with the release of the iPhone in 2007. Suddenly, people could swipe, zoom, and type on a digital keyboard. Plus, it also regrouped a bunch of functions exclusive to different gadgets. The hype was at an all-time high. Customers queuing and camping in front of Apple shops to buy an iPhone became the norm. From there, everything the company touched became gold. iPad, iCloud, AirPods, Watch, and MacBook created a convenient ecosystem for customers, and numbers perfectly reflect this insane rise. In 2018, Apple made history by becoming the first company to be valued at $1 trillion. They doubled it 2 years later and eventually tripled it in 2024. All this made Apple a haven stock for decades. However, for the first time in a while, people started wondering, should I buy an Apple stock? What most people ignore is that this is not the first time Apple has lost $1 trillion in market cap. Back in 2022, due to COVID, the company reduced the production of its most popular devices for the first quarter. Customers were equally concerned about an upcoming recession. If you are worried about groceries, the last thing that comes to mind is an iPhone. Due to a fall in sales, its market value followed suit, joining Amazon in the $1 trillion loss club. However, there is one difference this time around: tariffs. Over the course of Trump's first term, Apple managed to grab itself an exemption, but it didn't have the same chance this time around. We tried tracing Apple's stock in accordance with tariff actions, and here's what it looks like. Following Trump's tariff increases in February, March, and April, the company's stock has taken a deep dive. After the first announcement of a 10% increase in all imports from China on February 1st, stocks fell by 3.39%. However, as the percentages kept increasing from 10 to 20, then 34 on April 2nd, so did loss frequency. Between March 4th to 10th, stocks fell about 10%, and on April 10th, it fell 4.225% after Trump announced a 125% tariff with immediate effect a day earlier. Obviously, this fluctuated, but when compounded, it becomes clear that more or less than 30% of Apple stock was wiped out in just 3 months. And here is how it affects you and threatens Apple's survival. If you are still wondering how the tariff war between the US and China affects Apple and you, here is a breakdown. For years, Apple has invested billions in supply chains in Asia, and precisely in China. With tariffs as heavy as those imposed, the prices of all Apple products are likely to double. Some analysts are already alarmed that the next iPhone could cross the $2,000 threshold. This could further threaten Apple's position in China. Its government has heavily subsidized local companies like Xiaomi and Huawei by giving benefits on products less than $821. As mentioned earlier, millions of people still own and buy Apple products. Plus, its ecosystem works extremely well, so Apple will certainly be around in the next 5 to 10 years. But what about 20 or 30 years from now?